Hi guys, I hope all of you are doing well. Welcome back to Your Nifty Guy. Today's market wasn't just a normal red day, it was a full blown sell off, something which we rarely see. Sharp moves, panic exits, and very little time to react. And in markets like these, most traders don't lose because they are wrong, they lose because they are unprepared. So now the big question is what next? Do we look for a bounce or is this just the beginning of a deeper correction? In today's video, I'll break down exactly how to approach the market from here, key levels, possible scenarios, and a clear plan for tomorrow. No guesswork, just structure. And if you want to stay ahead of moves like this, make sure you are subscribed to the channel. I post daily trade plans to keep you prepared, not reactive. Of late, I have not been posting the daily plans because of the extreme volatility in the market, and I don't want people to uh, be coming to the markets every day with a plan and not react. It is at important junctures that I am coming and giving up straight updates. Yesterday was one of them, and today is a follow up video to the same. So, yeah, let's get straight into the plan. So today markets opened with a very big gap down, right? It was, I believe, 400 plus odds points of gap down. And usually, whenever there is a big gap down, uh, from there either the market goes back up or tends to remain sideways, right? These are majorly what happens after a big gap down. But today, why I call this a rare scenario is because after a huge gap down, even after a big gap down, the markets actually did trade very, very low. And that's something which happened. I again did not take even a single trade today because in one of the rules that I have is after a big gap up or a big gap down, usually, like I said, either it is a reversal trade, which where in market goes straight in the opposite direction, not giving good price action points to react to, or it is sideways. Either ways, I am not prepared to trade that particular day. And whenever there's a big gap up or gap down, I know that it is not going to be an active trading day for me, and that is the reason why I did not trade that day. Most of the profits are lost uh, in the overnight gap which is forming, and that is the reason why I decide not to trade on days such as these which have bigger gap ups or gap downs, right? And if you observe today after the market, the scenario did play out for quite a lot of time, right? So till about 1:55 or 2 p.m. If you can take it as a round figure, uh, till about 2 p.m. the market spent the time in the first 5 minutes range. Right, I'm not even talking the first 15 minutes, the first 5 minutes. This is the first 5 minutes candle, and till about 2 o'clock the market was in this entire range. Of course, even the option selling trades would not have performed today. The reason simply being India VIX shot up like crazy at the start, then maintained those levels, right? From around after the I'll tell okay, there's a quick tip which I want to share with you guys who if anybody is into option selling for a day like this wherein market opens with a big gap down, the VIX has already shot up, right? The premiums are inflated, but that do not mean that you go right away and sell those inflated premiums in a with the wish to collect the premiums when the decay happens, because you need to see is the VIX cooling off. Had the VIX started cooling off out here, that would have been the ideal scenario to take a strangle or a straddle so that you can take the maximum out of the VIX. Any which ways you are expecting the markets to remain sideways, and that is something. But then out here, it was very, very crucial to see that the VIX was not cooling off, right? After this big jump that we saw right at the open, VIX started moving in a sideways range itself, and at the end, again, in exploded just like the market. So that is the reason why, in case if you are into option selling, this is something that you need to look at before blindly entering into non-directional trades, right? So yeah, even though market was sideways for majority of the day, even option selling non-directional trades would not have yielded any good profits. The only thing that would have yielded profits today would have been call shorts, but then again those also could not have been blindly entered into, keeping in mind that with bigger gap up or gap down days, you can also see kind of markets making a bottom out there at the open and then reversing throughout the day. So that is also another scenario because of which we could not have, of course, done that. So again, in short, a no trading day for me. But then what I want to discuss out here is what next. So there is a scenario which we had discussed in yesterday's video. So in case if you have not watched yesterday's video, I'll be quickly deleting these things. We do not need them right now since the structure has changed entirely. Uh, so on the daily time frame, this is what we had discussed in yesterday's video. The market is already in a lower high, lower low formation, and today we have beautifully created another low. So this is one scenario that we had discussed, that either the markets will protect this low, go down a little bit, form a double bottom, and then move ahead. If the bottom has to be formed out here, a short term bottom, not a long term bottom. If not, we can see continuation. That is what we saw today. Markets have actually breached. So if we look at the levels yesterday, till about yesterday, the high was somewhere around 23,850 odd levels. Today's low we have breached. We have come very, very close to 22,900 odd levels, right? So this is a massive, massive move which has come in a single day. And like I said, a very rare day where in even after a massive gap down, you see a good enough move. I'll take a good example of this particular day wherein, right, like the reason what I was saying is after a big gap up or a gap down, you see the markets actually move in the opposite direction. Was this day when the US and India trade deal was announced and markets opened with a massive gap up. And if you can see out here, after the gap up, it immediately came all the way down, right? So that is something that could have been expected today as well. After the gap down, this could have been a green colored candle as well. But then again, we are somebody who is not going to predict anything. We are simply going to prepare ourselves so that we can react accordingly to whatever the market is doing, right? We'll not be going ahead with any bias that this is what is going to happen. Now again, there are two scenarios which can be there. Is markets already, the structure is lower high, lower lows. We can break down below this particular low, continue down, give some pullbacks. Everything will be a sell on right scenario in that particular scenario. And apart from that, okay, no major supports as well. I believe 23,000 should act as a strong support. Now, there is another thing which I have observed is open-ended divergence on some of the higher time frames. Now, what do I mean by an open-ended divergence? For people who do not know the right way to use RSI, let me quickly explain it to you. Okay, I'll not be using this. Sorry. Markets today have formed, this is the daily time frame. Markets today have formed a lower low. RSI, however, has a higher low. But why do I call this particular thing as an open-ended divergence and not create an immediate long entry out here is markets tomorrow, if they open again with a gap down or they move back down below today's low and this low, this particular RSI current levels, they breach back below this particular level, the divergence will vanish. So that is the reason why this is still an open-ended divergence and we cannot act based on this. But this is a point worth keeping a note of. On the 4-hour time frame, again, similar scenarios which are being played out. Markets made a new low. RSI has made a higher low. On the hourly time frame, same scenario. Markets have formed a new low compared to this particular swing low. RSI has formed a higher low. So this is something that we need to keep in mind. What this can mean is yesterday what we had discussed is that markets are coming down like this. This is the pullback which we have gotten. Again, markets can go down a little bit and then we'll be protecting this low and then going back all up. Now, this is one scenario which would have been ideal, but then there is another scenario in which this is a liquidity hunt wherein market is making all the weak hands go out, right? Creating panic with a big gap down and a bigger sell off coming in after the gap down. wherein retailers would try to panic and move out while the big money is slowly building their positions because they have planned to take the markets higher from here. Right now, see again, be very very clear, these are possible scenarios, this is not what I'm implying it. The divergence, the RSI divergence, the positive divergence which is there on multiple time frames is still open ended, and tomorrow's price action can still wipe that divergence out, and we can still be in a downward momentum because the higher time frame structure is still bearish. Till the time the structure shifts, we cannot say that the markets have formed a bottom. So let's see what it has in store. But then again, my main primary reason to again make a video subsequent to yesterday's video is because of what has happened in today's market. And yes, of course, we need to be prepared for what is coming next. Now, ideally, uh, tomorrow's plan of action should be very, very simple. Number one, below today's low, we are short, right? This goes without saying, but then of course, do not trade without a pullback because a scenario like a trap scenario can also form, and that can happen at the start of the day itself. So be very very clear about it. This is something which has to fulfill all the conditions. So we need a good bearish candle at the start of the day, wherein market goes and gives us a closing below today's low, and then the high of that candle gets taken out. In that case, we can take a short scalp on the long side. Now we have to be extremely extremely careful about this move whenever this is happening, and any scenarios of going long right now will have to be ultra conservative, right? Even on an intraday basis, the markets might give us some knee-jerk reactions showing us that okay, the market is now ready to move on the upside, but then all trades or on the long side have to be very very well calculated with, and we have to be extremely extremely careful. So if you are a beginner and do not have much experience in the markets, stay out of the markets completely right now. If you have some experience, my suggestion would be to not take any long trades till the time we have at least at least crossed 50% of today's range, right? Sorry, I am excluding the gap, but then till the time we do not move back above 23,150, uh, please do not expect to take any trades on the long side apart from the trap scenario. Of course, that also has to be a very very quick scalp. So yes, I am not suggesting any long trades for now. We will be waiting for tomorrow's price action, and that will also be the weekly price action complete formation, which will be there for us. So we'll be trading based on, we'll be making a new fresh new plan tomorrow. But then for now, I believe this should be it, and mostly tomorrow again can be a volatile, also can be a sideways day. Today we have seen a good trending day. Tomorrow can be a sideways day as well. So only if any of these two scenarios is happening, trade again, trade with lower capital, trade with lower quantities, and trail your positions tightly, right? And have strict stop losses. If the stop losses are getting triggered, do not hesitate to get out of the trade. So yeah, that's the plan for tomorrow. Remember, in markets like these, it's not about trading more, it's about trading right. Stay patient, respect your levels, and don't let volatility push you into bad decisions. If you found this helpful, make sure you like the video and subscribe to Your Nifty Guy for daily trade plans. I will see you in the next one. Till then, trade smart, stay disciplined, and let the market come to you. Cheers, guys. Thanks for tuning in.